Hello, Mr. Mediratta. Welcome to the Business Standard Show.
Good afternoon, Nivedita, and thank you for hosting me on this platform.
You have steered the Indian business of German chain Metro AG for several years. And now it's over to Reliance. What is the transition like?
So I will say that we are still in the middle of the transition. The deal has not concluded finally. We are waiting for some regulatory approvals before the deal will be concluded. Yes, a definitive SPA has been signed. It was signed in December. So we hope that the deal will conclude by end of this Indian financial year, which is by March 31st.
But so far, what is your impression, from a multinational company to a completely Indian conglomerate?
So I will say there are several things which I want to highlight. So first of all, we believe that the B2B model that Metro is basically focused on has a lot of opportunity in the Indian market, right? And to expand our business from 31 stores to probably 100 plus stores, we need investments, we need CapEx to be able to expand our business aggressively, both the physical footprint as well as the digital footprint, right? And we believe in the form of Reliance, we have a partner who has a very robust understanding of the Indian market. It's a core market for them. They have the deep pockets required to invest in this business, to grow it and grow it multiple times. And I will also say that there are a lot of synergies which are possible by becoming part of Reliance Group. We will get scale, which should help us negotiate better terms of trade with suppliers. They are very strong in technology with the geo platforms that they have, right? So we'll benefit from that. And of course, if you combine with the capability and the understanding of B2B space that we have over the last almost 20 years in India, combine that with the Reliance's knowledge of the Indian market, we have a very, very powerful combination.
Any indication on what will it be for the people of the company? Will there be any change there in strategy?
I cannot answer these questions on the future strategy and the future organizational plans, but I can tell you that from our conversations that we have had with Reliance, they're very clear that Metro has very strong capability in this space, and they are very keen to retain all the talent that we have. And this is a message that we have been sharing with all the people in the head office as well as the stores, that we have a profitable business. Nobody else in India in B2B space has been able to develop and run a profitable business. And people have to be very, very reassured about their future.
Like you pointed out, Metro Cash and Carry was doing well, and there is a huge promise in this cash and carry segment. So what went wrong? Why was the India business sold in the first place?
So I will say it's wrong to use the words what went wrong. Everything went right. So let me explain to you. So we have been focused on B2B in India from day one, since 2003 when we set up the first store in Bangalore. It took us almost 15, 16 years to turn the business profitable. So we were profitable in 2018. We became profitable for the first time in 2018. And we have been profitable since then, despite the competition increasing manifold in this space, right? Of course, if you look at any business in the life cycle of that business, once you have established a very robust model, there is time for expansion, right? So we believe that $1 billion revenues, 31 stores is not doing justice to the opportunity in the B2B space. As is logical, once you have reached a certain base of $1 billion, very strong customer base, very strong presence in certain geographies like Karnataka, AP, Telangana, UP, etc., we believe that we can do a lot more. The market itself is $600, $700 billion in terms of size. So we can be 10 times bigger, but to be 10 times bigger, there is money required for investments. Now, we have had several rounds of discussions with the parent organization. We also put together a blueprint from what is possible in India. If the investments come in, what is the quantum of those investments that we need over the next 4-5 years period? And after that, the company decided that given the Ukrainian-Russia war, and both are critical markets for us, and looking at the entire political landscape, Asian market, they are not very focused on Asia. They exited China about a couple of years ago. We exited Vietnam probably 8-9 years ago. So they decided to focus their resources on Europe. And that was a time when we said, okay, then let's look at who are the potential partners available in India. And of course, Reliance emerged as a front runner.
Do you think there have been regulatory challenges on the way and that things could have been better in India?
Yes, I think there are regulatory challenges, and it's not at the center level. I think sometimes it's about interpretation of the policy. It varies from one official to another at the state, and I will say even at the city level. So we have to sometimes educate the government officials that please read the FDI policy and educate yourself instead of coming and harassing us.
Staying on the regulatory theme, what are your thoughts on FDI in multi-brand retail? I know you in metro cash and carry, you were not interested in that space. But as somebody from the industry, what do you think? Do you think there should be greater clarity from the government on, what really should be the policy on FDI?
Yeah, to my mind, it's a very good question. I personally believe that the government should come out with clarity on FDI in multi-brand retail, right? If multi-brand retail is allowed, I think it's going to be good for the end customers, right? Because you'll have foreign players who don't have to be bothered by, different interpretation of the FDI policy by different government officials across states. If there is one clear policy and we allow multi-brand retail, a lot of the problems can disappear.
Finally, I want to ask you about the mood in the retail sector. What is the consumption mood like, really? What are the numbers telling you? What are the trends telling you?
See, from what we understand right now, there is some softness in demand, especially in starting from January. There has been some softness in demand. I was talking to some people even before this call. So yes, there is some softness in demand. People are not opening up their purse strings as liberally as we would like them to do. I think the layoffs which have happened in the IT sector have played some role. So people are fearful about their future, right? There is also the cost of inflation is running high, of course. And that is also, in a way, playing spoil sport because people are focusing on essentials and discretionary spend has been cut. But I'm very optimistic that overall the India growth story is very much intact. So I believe that maybe in the next 5-6 months, demand will again pick up. And this whole negativity because of layoffs and all will disappear.
Thank you. Thank you so much for speaking to Business Standard.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.